Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at Afterpay and why investors should do their research before looking to invest in this stock. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. Hello, I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, click that bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now Afterpay is the leader in the buy now pay later space here in Australia, and it has now signalled it wants to get into banking in the hope of reducing its reliance on the buy now pay later space. Some analysts are suggesting this is a great move which will create enormous upside potential for Afterpay's share price, whilst other analysts are not so positive. While the big four banks dominate the banking sector here in Australia, many new entrants have tried to break their stranglehold, so it'll be interesting to see if Afterpay can make some inroads here. The big banks are known for letting newcomers to build new products and services and then allowing them to do the heavy lifting to develop a mature market segment in order to prove the concept is viable long term. Apple does this really well, as they did not invent the smartphone or the iPod, yet when they entered these markets they did it better and dominated very quickly. Afterpay has been a great growth stock for investors over the last 4 years, although anyone who believes this will be replicated in the next 4 years will most likely be disappointed. In the near future, Afterpay will be subjected to more scrutiny and increased competition that will challenge its ability to generate ever-increasing revenues. ASIC is looking at the buy now pay later area with a view to regulating it more, which I believe is long overdue, with any increased regulation increasing costs and potentially adding restrictions to how business is done. And with the move into banking, Afterpay will have to deal with even more regulation and scrutiny. It is possible that the big four banks will have a buy now pay later company on their radar as a takeover target, or they will launch their own service, possibly in conjunction with credit card providers like Visa and MasterCard, or other payment services such as Apple Pay or Google, who have both signalled in recent weeks their intention to get into the buy now pay later space. Afterpay has also entered the US and European markets, which represent great opportunities, but I suspect their journey in these countries will not be as smooth as it was in Australia, which means they'll have to mature as a company and prove they are not just a good company, but a great company. Now it's time we look at the market, and first up we look at what were the best and worst performing sectors last week. Well, the best performing sectors last week included healthcare, and that was up 4.71%, followed by consumer staples up 2.19%, and consumer discretionary, that was up 1.80%. The worst performing sectors that included energy, which was down 1.73%, followed by materials, that was down 1.15%, and industrials, that was down 0.74%. The best performers in the S&P ASX Top 100 stocks included Fisher & Paykel, healthcare, that was up 7.59%, followed by CSL up 5.67%, and Wesfarmers, that was up 4.75%. The worst performing stocks included Altium, that was down 9.41%, followed by Evolution Mining down 9.38%, and Crown Resorts, that was down 8.41%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
Well, isn't the market interesting at the moment? I mean, last week, earlier on in the week, which we'll see on the charts in a second, it was doing exactly what I thought it would do. It was trading down. It was down 2%, I think, at one stage by the end of Tuesday or on Tuesday. And then the rest of the week, it just turned around and started to make up all the lost ground that it lost in the first few days of the week, and actually closed higher, and it closed at its highest ever closed, also making a brand new all-time high. So if you feel like that the stock market is a bit of a roller coaster at the moment, you're not alone. I think there's a lot of us are thinking it's not really picking a direction. It's inching its way up, but it's not really super bullish, but it's also not being super bearish, even though last week, as of Tuesday, I thought, yep, now it's finally doing what I'm expecting it to do. And then it just turns around. That's why I keep saying, well, we do need to expect the unexpected at the moment, or, whilst we, hope for the best, we plan for the worst. But let's go on to the charts now and see what's actually going on. Now, on the screen, I've got a monthly chart on the left and a weekly chart on the right-hand side. I'm just going to have a quick look at the weekly chart, and you can see here how, obviously, the angle is still playing out. And last week's bar, I haven't touched this grey line at all. I have not touched it, but you see here last week how the market came down, touched the line, and immediately took right off again. But again, it's that momentum. It just keeps finding that sort of angle at this point in time. Now, looking here, we see that high of 7655. Now, that was our highest point up till the 2 weeks ago, which broke it by about 1 point, which was 7656.3. But really, there's 1, 2, 3, 4, 5 weeks there where the market wasn't going anywhere. Now we've got a new all-time high of 7676 points, and you can see there 198 point range, big range, and encompasses the complete range of all of those bars in that previous 1, 2, 3, 4, 5, 6 weeks. This is a real unusual bar, and I'll just show you what happened last week. You can see here, we're looking at there, Monday, bang, Tuesday, bang, Wednesday, it came back, but it still looked weak on Wednesday because it pushed right up and then came back down. But Thursday was the big winner here, up 78 points, opening on its low, closing on its high, with Friday just inching a little higher. Now, the interesting thing is, can it maintain this sort of level of speed? But right now, it is that sort of at that, I won't say a precipice, but I'm just saying it is really sort of crunch time for our market. We now are well and truly into the second half of 2021, with July almost finished. This week will be the last week of July, so it's really important. And I did know when I talked to you last week on our reports, I'm saying, this 7,600 point level and was the one that I thought I had predicted right back here, thinking our market could rise up to 7,600 points, although I did think it needed to come back before it got to that point. So that's one thing I was thinking of. But I was also saying it hasn't closed above, and there's a pretty strong resistance level through here. But this week will tell. If that close there is back down around that 7,600 point level, then we may be seeing that sort of tipping point through here. But if this week our market stays strong and the close stays well above that 7,600 points, and let's say it expands it up, maybe 10 or 20 points or even 30 points above that sort of level, then I would suggest we're on our way to getting to that sort of 8,666 point level, which is the next sort of resistance level I have for our marketplace. But anyway, time will tell what's happening, and what we always need to plan for the worst and hope for the best. Now, it's not just assuming. There's a lot of people out there saying the market's going to crash. There's other people saying it's still going to be bullish. And really, at the moment, I'm not sure what is driving this market. I mean, we've got Sydney in lockdown. Major lockdown, I suppose, is probably a better way of saying it. We've got talk of Sydney's not going to open up probably until September. We've got issues in Queensland. We've got obviously issues here in Victoria. Hopefully here in Victoria we come out of lockdown on Tuesday night, but that may or may not happen. Now we've got cases in other states in Australia. So we've got I think it was last week we had over 50% or around 50% of the population in Australia in lockdown. So that's got to affect profitability. We're seeing businesses coming out saying that they're struggling, they're closing down. There's a whole range of issues at the moment in our economy. But let's look at this. This is the run-up from the COVID low, and you can see here how it has been tracking up along this dashed line that we're seeing through there. And if I extend that out, I haven't touched this for weeks, but all I'm doing is just pulling it straight out, and it's not really changing. It's really going along that angle. I want to compare this and just share with you why we're in unprecedented type of market conditions. If we look at the last run-up, this is the run-up between June 2006 and the top of the GFC in November 2007. So if I put my pointer on there and just draw it straight up there and just show you at that angle that it was on, I can drag that around now and show you it was on that angle for this point in time through here. Then it came down into June. I can go back in time and it wasn't as fast in the early part of the run, which is pretty normal. Normally you don't get the big rampant moves in the early part, you get them all in the end part, and you get that rampant speculation on the end part. So you can always expect that second part or that last part of any move will be more rampant speculation. But if I go over here and I take this angle, which is really just from that point there, you can see here out of the GFC low, it went faster. It really was a fast move out of that GFC low again. And we've seen the same sort of fast move out of COVID, but look at how fast it was. It was much faster than the move out of the GFC low. Much, much, much faster. If we go up to this sort of area here, and you can, from that low there that we saw in September last year, again, it's still faster than what we saw out of the top of the GFC. Now, this little point in time, it's running at that speed, but let me go back and just show you. Does it a little bit here, same sort of speed a little bit there, same sort of speed a little bit there, not so much there, a little bit sort of through here, very much through here. So it doesn't keep up at that sort of speed, if we go there, for that long. So how long was that actual move? And that's one thing we need to look at. So if I use another one of my little tools that I've got, and I click on that bottom there and I go to the top to that one, it measures it's 17 bars or 17 months because I'm on a monthly chart. If I go over here and do it from that low to here to what we're in right now, we can see it's 17 bars. If I got it on the right ones, yep. Oh, sorry, I've missed it. Sorry. Let me just put it onto that. I wasn't sure whether I had it on the right one. We're seeing 16 months. So within 1 month of that long move. So this is why I keep saying the market is due for a pullback, and it has been due for a pullback for quite some time, because I really don't like seeing this big long, whilst I love it from a profitability point of view, when you're looking at and I keep talking about the seesaw, eventually if you keep walking up the seesaw, you're going to get to that point where it just tips over. And each day and each week and each month it moves up and moves up and moves up. It's getting closer to a point. Wherever that point is, whether that point is going to be next week, next month, or even next year, every week, every day, every month, we inch closer to that pivot point where it eventually will come down, because there's nobody alive today that would not think that our market will come down, that the US market will come down, or any stock market won't come down. It's inconceivable to think that our market will not crash again. It will crash again. Not now, but it will crash again sometime. Will it ever fall by 50% again? Yes, it will, because history tells us that's what it does. And we've got over 100 years of history on our stock market, and several hundred years on the UK markets and other markets. And this is what happens. It's a repeatable pattern that markets do. Modern technology is not going to change that, and having apps on phones is not going to change that. It's all about market psychology. If we're fearful of the market, we all sell out. And that creates these patterns that we see all of the time. So what I'm seeing on these charts is that the move we're making right now is really quite fast compared to historically. And it's also quite long for this type of move to be happening. And so therefore, that's why I keep expecting the peak to happen. So again, how do you plan for this? Now, whilst hopefully, if this market this week we stay up and we stay above that 7,600 point level, then I think we can be moving up for the rest of the year through to that 8,600 odd point level that I mentioned before. And we can be moving that. But I'm also going to be saying I'm going to be doing that with caution. Because again, whilst we hope for the best and plan for the worst, we also need to make sure that we're protecting downside. So while stocks will be taking it up, you don't want to be getting into the market just before it starts to tip over. You don't want to be buying stocks just before they tip over. It's a pretty common mistake that investors make. They see a stock take off like a rocket and take off and really sustained move over months and months and months. And then all of a sudden they start to jump in on mass just before it's about to turn over again. So that's what I'm worried about at this point in time. But right now the market is bullish. I need to assume it's going to continue to be bullish until it's not. It just doesn't mean I can't be cautious about it. But let's now get into the questions that you have for me. All right, the first question we have today is from Paul. And Paul goes on to say the sentiment on YouTube, at least at the more vocal economist, is that the market is due for a significant correction, although who knows when. And you're quite correct. A lot of people are predicting, we're seeing a lot of people in the US predicting a crash. Now, just because the US might fall doesn't necessarily mean our market's going to fall commensurably. Basically, if the market in the US crashes, it doesn't necessarily mean our market's going to crash all the time. Yes, we do work on bigger moves with the US. As Janine and I have explained a few times in our live show, it's not normally, whilst we do follow a lot of the moves, we don't always follow the same severity of the move. So whilst the US may fall heavily, our market's unlikely to fall heavily. So you need to be careful to put things in context, Paul. Now, I'll finish your question in a minute, but I just wanted to break it up in a couple little parts. So if you're looking at US economists and what's happening in the US market and saying the Australian market will do the same thing, that's incorrect. That's really what I'm saying. You need to look at each market on its own about what is possible and what's not possible. Paul goes on to say, isn't it wiser to hold cash and wait now and buy stocks like Rio at a lower price if and when this correction occurs? No, that's not correct. It's not the best thing to do. Buying cash right now, you could be sitting in cash for 3, 6 months, 9 months or 12 months. You could be, because I don't think our market's not going to crash. It's definitely not going to crash. I don't think it will. We might have a slightly bigger pullback than what I was expecting, simply because the market is moving higher than what I thought it would before it does pull back. But it definitely won't be a crash. And what you're missing out on at the moment is possible opportunities to still take profits. But as I was saying a little bit earlier in my report, is you don't want to be buying stocks just before they tip over. So if you've currently got stocks right now, all you need to do is put a stop loss on it. It is so simple and basic to do that. If you don't know how to do that, get a copy of my book. We'll teach you how to do them. Because you should never, ever, ever have to worry about a correction or a crash or any downside move. And you won't if you follow good rules that I outline in my books and what we teach our students. We say to our students, you will never, ever, ever, ever get caught in a stock market crash, as long as you follow the rules that we teach you. And I'll say that to you. If you follow the rules, then you'll never get caught in a crash. Yeah, you might have a stock or two over many, many years that might just fall out of bed on an announcement. That happens occasionally, but it's rare. It's really, really rare. And I think that's probably only happened to me twice in my history. So that's how rare it is, because generally stocks, if you're buying the right stocks and you're buying in the right way and using the right tools and strategies, then you'll know the stocks that are right to buy and the stocks that may do that for you, or may do that to you, if that's what it makes sense, is that it will drop out of bed. But your exit rules will get you out before those sorts of things happen. But your entry rules will get you into them before they take off the opposite way. And I find that happens a lot more often, where I look at, okay, I'm going to buy a stock, and all of a sudden it just takes off like a rocket because of not because of my announcement or my analysis, sorry. It just looks like it's going to take off. I buy, and all of a sudden it jumps on an announcement and goes. And I find that happens quite regularly, actually. So again, don't worry about the downside, because it's only about losing money that people are worried about. If the market's going up and stocks are going up, then you're making money. As long as you draw that line in the sand, then you won't lose the money, and that's really what I suggest you do. Paul goes on to say, and aren't many commodities and energy stocks currently correcting or pulling back even now due to such strong recent run-up in the past year or so? There's some of the commodity stocks are falling away, but some are still rising. I mean, we've got BHP, Rio and Fortescue, like I all said last week, but all around their all-time highs or just breaking in new all-time highs. So we've got some of that happening. He goes on to say, I've also heard different opinions on the correlation of commodity mining stocks with other sectors like tech. Some say history tells us there's an inverse correlation between stocks and commodities, i.e. stocks down, commodities up. But say if the stock market crashes or turns down, commodities will as well. Correct. I don't subscribe to those theories, mate. Commodities can go down. We have a commodities market, and that's sort of where I was getting to when we're talking about, if you're getting this sort of stuff from US experts, then I would say disregard that sort of stuff. If they're from Australian experts, then have a look at it and prove it to yourself. And I've often said, and I say it in my books, and I definitely say it to our students in our courses, is don't believe me. Look at what we do, look at what we're teaching, and test it and come to your own conclusion whether it works for you. Because experts get it wrong all the time. And we do, because it's just our best guess right now based on our knowledge and experience the education we have and based on the data that we're seeing. So we're making an assumption, but you need to understand that yourself. So I wouldn't necessarily apply that. And with the US market is not a commodities driven market. Ours is. We're a very heavily commodities driven market. We're driven by financials and commodities. If financials and commodities or materials are going up, then our market is going up. If one of them is going down, the other one's going up, then our market is more subdued. If both of them are going down, both financials and materials are going down, then our market is going down. So we're a much more commodities driven market, unlike any other market pretty much in the world. So I would listen to more Australian experts on that, not necessarily if you're looking at news from the US, etc. So please just keep things in context. But right now, if you do have stocks, I'd still be holding them as long as they're going up. If they're going, but I also would say to you, make sure you put stop losses on them. If they're falling away, then maybe you should look at drawing that line in the sand and exiting. But don't stay out of the market and get into cash. That's what I'm saying, because you're not going to earn anything there. But thank you very much for the question. The next question that we do have is from somebody called Cal, who says, "Hi Dale, great show once again. Thank you very much. When talking about these big mining energy companies, how much attention should we place on companies cannibalising growth to fuel their decarbonisation efforts?" I hope to say that one right. Would you say these efforts help future growth through market sentiment or stunt long-term shareholder value? Please, other stakeholders. Or I'd be interested to see how their half-yearly financials look given the recent scrutiny from the environmental groups, especially those with big investment decisions in the second half. Thanks to you and your team for all your continued hard work. Well, thank you for appreciating what we're actually doing. Geez, look, I wouldn't look too much into that. It's part of what they're doing. They're not going to be sacrificing profits to be more environmentally friendly. It's all part of what they're actually doing, because being environmentally friendly can actually aid their bottom line as well, because obviously it's about being good corporate citizens, but the chart will tell you everything, and we're seeing companies have been moving this way for a long time, and I would say probably closer to 2 decades. I mean, how long have we heard about climate change when Al Gore had that, something truth, I forget what it is, the big video that went around, and that's probably a good 10, 15 years ago. So our companies have been looking at this sort of stuff for a long time. They've had a lot of people coming into their, or protesters protesting about what they're actually doing. So I wouldn't really look too much into it. They know what they're doing, and they're not, I don't think they're really cannibalising things. They're just adjusting the way they're doing them, but they're still making really good money. Our markets, they are still quite bullish, a lot of these stocks, but we're getting a lot more companies coming in that are more, are much more environmentally friendly, especially around the energy and renewable energies and that. And you might find some of those energy companies that you say might be cannibalising their future profits. They might start taking over some of these smaller energy companies. It's sort of like what I was talking about earlier in my report with buy now, pay later spaces, with Apple sitting back waiting. Apple never releases Apple didn't release a 5G phone until everybody else had released one. They waited to see what was going to happen before they entered that market. Same with iPhones, they waited. Same with iPods and a whole range of other things. So some of these big energy companies would be sitting back watching this space with a view to start taking over some of the companies as proof of concept is done and proven, and that's more viable, and they'll start taking them on, which will boost their future profits. So I think you're going to see some of that over the coming decade anyway. But great question. Now, the next one we have each week, before I get into that, each week, look, again, wonderful questions from you and those of you who have purchased my book. Giving me a lot of stories about what you're doing and how you're doing so much better with your trading and investing. So before I go into my next question, I want to thank you for those really, really nice emails from, it's Janine and I and the team here really love seeing those emails where you say, hey, I read your book, my trading's turned around, my portfolio's better, I'm making a lot more money, thank you, I'm not losing money, you fixed everything for me. So thank you for those emails, and please keep sending those through. We do love hearing those from you. Even though you may not be asking me a question, I do love seeing those emails and I do read them all. But if you haven't secured your copy of my book, then what are you waiting for? I mean, so many people are saying, they are getting great results, and in the book you're getting decades of experience to learn or to learn from. So if you just want to get a copy of my book, just visit our website. You can still get a copy of my first book for free. All you need to do is pay shipping. Just ring us, go to our website wealthwithin.com.au, or ring 1300 858 272. Now we have a question from a gentleman who's actually put questions in a few times, or a person that's put questions in a few times, King Cash Schumer. He says, G'day Dale, wondering if you could cast your eye over Steadfast in a future episode. Seem to have a steady rise up over the past 5 years. Keep up your great work. Well, let's go and have a look in Kashima at Steadfast. So bringing on the laptop now. We can see Steadfast Group now since April last year, so it had the COVID low started up. It's moved a little bit later. Steadfast is, I'm trying to remember what it is. Is it data centers? I've gone blank on what they actually do, but they have been doing very, very well. And you can see here, very well over the last sort of 7 or 8 years. Beautiful run up. A little bit of indecision so far here in July. So I'm not sure whether you own or you don't own it because you've not actually mentioned it. But right now I've basically assumed that this stock will continue to keep moving in an upwards direction because it's not giving me any signals to say, hey, it's weak or it should be going down. But right now I do like the look of this stock. It is a lot of decision. It's been a little bit more bullish in the market, but not much more. You can see a lot of indecision since sort of June. It's not pushing through. So all I would do, mate, as I was saying before, make sure you've got a stop loss on it if you do own it. Would I be buying this stock right now? Probably not. I think it's run pretty hard. We're talking about it's gone from that sort of lower 224 and now it's up around, where is that point? 442. So it's nearly doubled in price since April last year. Would I be buying it now? No. If I was owning it, I'd still be holding it. I would just put a line in the sand of my exit point. And the last low on that chart was probably a good place to put it. So, but thank you very much for asking your question. The next question we have is from Joe, who says, hi team, can you please do an analysis on CRN? Hoping to invest in it for short to medium term. Cheers, Joe. So let's go and have a look at CRM on the chart, Joe. I'll just bring that up for you to have a look at. So this is Coronado Global Resources. Looking at it to invest the short to medium term. Now, I'm not sure what's excited you about this stock at this point in time, but right now I think you probably... you might be right. I don't like that low there in May at 49 cents is below that low there at 55 cents. I really don't like it. And so far, it really hasn't tested that low. So to me, you could be getting in a good time and getting in a great run, but right now it's not. As a trader, I'd be sitting back watching. As you probably heard me say many, many, many times in the past, I'd rather give up a lot of money on the bottom to know that this thing's moving up. Otherwise, you could be getting in a move through here. And if we look here, and I put that on there, and we can see that there, we can see that move up was 130% there. And then it fell away. And then this run here so far is up 100%. So what's to say this move up here on the right is not the same as this and it's just going to fall away and go down again? I'm not saying it is or it isn't. I'm just saying, how do you know? And this is what we talk about, always trade on confirmation, not speculation. So I don't know whether you've read reports or you've read something in the media, the people are saying, hey, this thing's going to go through the roof, blah, 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 it's doing X, Y, and Z. I don't know. I haven't read any of those reports. It's not a stock that's on my radar. It's lower liquid for me, and I really wouldn't be in this stock myself based on what I'm seeing at the moment. But I think it's probably a little bit too early because you might see this stock continue to fall away or you might see it travel sideways. I don't know. But look, as long as you've got the good rules and your rules are fine, then go for it. But I don't think you... One thing that a lot of people... confused of, I get people saying, and you've said here short or medium term basically, so you should know one or the other. Am I trading this short term or trading it medium term? Because there's two different trading strategies for that, and this is really what I teach people. It's saying, well, do you want to trade short term, medium term, or longer term? What is it? Don't confuse it and don't have strategies that are confusing. And I see so many traders do that. They go, oh, I'm gonna trade this long term, or I'm gonna trade this short term, and then their short term trade turns into a medium term trade because they don't follow their rules. And then the stock falls away, and then they say, oh, I'm not going to sell now, I'm going to hang on to it. And then it turns into a medium term, and then they still don't follow the rules, and it turns into a long term buy and hold because they won't take their exit strategy. So I'm sure you don't do that. Do you, Joe? Probably not. And I'm sure people watching don't do that. Yeah, a lot of you do, don't you? And so it really is about having a solid strategy about what you're doing. So be congruent with what you want to trade and how you want to trade and the outcomes you want to do. And that means having a solid strategy, have a solid trading plan, have a written down solid tested trading plan to make sure, back test to make sure. If you're trading short term, you need to back test the stocks you're trading short term on, so you've got a solid strategy just for trading short term. That's what we teach our students, and I suggest that's what you do. But really, thanks, Joe, for sending in a question. I really do appreciate you doing that, and please send more in, and anybody that else has a question, please send them in. But thank you to all of you for sending your questions in for us to answer this week, and I do hope we've been really helpful to you. If you do have any questions you'd like me to answer, you just need to do two things. The first is subscribe to the channel, please. The more you subscribe, the more it helps us, and we're putting these on for free for you. We're answering all your questions. We're helping you. The best thing you can do is tell people about us and hit the subscribe button, hit the like button. That's really all we ask for you to do, and we'll keep doing these shows. So if you do have a question, subscribe to the channel, then type down below in the comments section and put your questions down there, and we'll get to answering those questions next week. But you do remember, right here on this channel, we do these Monday market reports each and every week. We also do our live stream every Tuesday at night at 7 to 8 p.m. So hit the subscribe button now, click on the bell on the right of it so you know when we upload videos. That's it for me. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.